So here's an example of a real world pay stub, even though this is just a sample pay stub. And it doesn't have any confidential or private information on here or personal information here. So there's nothing to worry about here. But as you can see here, this is an earnings statement. So I'm going to circle this here, earnings statement. So this is simply just a pay stub that shows your information, your employee ID, your the pay period here. Let me circle this. The pay period, which is the period of when you worked, and you have the cash payment date here. Okay, this cash payment date here is for the period that you've worked. So you get paid in the future for work that was performed in the past. Okay, so then you have here the regular earnings here. It's for $20 an hour for 40 hours a week. That's going to give you a gross pay of $800. Then you have your FICA taxes. These are your deductions here, this column, your deductions. Starting off with your FICA taxes. So Medicare and Social Security taxes of $11.60, $49.60 for the current period. And then you have your federal taxes and your state income taxes of $111.40 here. And this, this is for the current period. On the right of it, this is the year to date. So that's usually the case. I know on my pay stub, it shows what's being currently taken out of my account and then what has been coming out of my account for the whole year. What's in total been coming out of my account, or what has been taken out of my account. So we have year-to-date gross here at the very bottom left, $7,200. Year-to-date deductions of $1,911. Then the year-to-date net pay of $5,288. Current total, because this is what we really want to pay attention to. The current total is $800. Again, that's your gross pay. Your current deductions, $212. And then you have your net pay of $587. So this net pay here is what you're actually taking home, not the $800, the net pay. The current deductions here of $212 is taking into consideration all of these amounts here because these are all deductions that occurred in the current period. So the companies have to record this in their books. They have to account for this payroll here that's shown in the earnings statement. So recording employee payroll. So what the company has to do as of February 28th, because we see here the pay period is from the 22nd of February to the 28th of February. They're going to have to accrue the expense in their books. And you notice that when you accrue for something, cash is not being exchanged. So first thing they're going to do, well, it's not the first thing, but the account that they're going to debit is going to be salaries expense for $800. This is them reporting or recognizing the gross pay that was earned from the employee. So this represents the earnings from the employee. Now, from these earnings, some things are going to have to be deducted from this amount. So one thing in particular is FICA taxes, which includes Social Security and Medicare. So 6.2% of $800 is $50 here. Okay, that matches what you see here with the exception of rounding it to the nearest whole dollar. So you see the $49.60. I just rounded it to the nearest whole dollar to just keep it simple. Then you have the FICA Medicare taxes of 1.45% of $800. That gives you $12. So on a pay stub here, you see that it's $11.60. Rounded up to the nearest whole dollar, that's $12. Then you have the employee federal income taxes. That's $111 here. I'm rounding it to the nearest whole dollar, so $111.20. That's just $111. Then you have the state income tax of $40, and there it is right there, $40. So when you take all four items into considerations as deductions, you're going to get $212. So subtract that from $800, you'll get the net pay of $588. That's your take-home amount. That's what you are going to actually get paid in cash, and the company has to record this as salaries payable. So they're going to have to record this as a payable because they do owe you this amount here of $588. So this is what was accrued on February 28th. and it's for payroll from 22nd through 28th. Now on March 1st is the payment date. So this matches what's shown in the earnings statement, the pay stub. So on March 1st, they made the cash payment, which means that they're going to go ahead and eliminate the salaries payable balance by debiting it for 588. Oops, that is not what I wanted to. I didn't want to circle it like that. I want to cover the amount. There we go. So they're going to eliminate the balance. Okay, so eliminating the balance, the balance that was actually accrued on February 28th, and the credit is going to go to cash for 588, recognizing that the cash payment was made. So that's the employee payroll side. Now the employer has to do something on their end. So as you can see here, right below employee payroll, we have employee payroll taxes, and then the employer also has to record the other half of the FICA taxes right here. So 6.2% of 800, 1.45% of 800. That's the other half that needs to be recorded. So the employee has to withhold, have half of it withhold from their paychecks. The employer needs to also pay the other half on their end. Then you have the state and federal unemployment taxes. Employees are not responsible for this. The employer is responsible for the state and federal unemployment unemployment taxes. And as you can see here, 5.4% of 800 is $43. 0.6% is $5. And so when you add all four of these up, you will get $109. $109 is going to have to be debited to payroll expense. Now, all of these accounts here that are credited, these are payable accounts. So these are liability accounts because the employer is responsible for contributing to these accounts here. So they're going to have to make these payments here because they're liable for it. And so this is why this is also an expense, payroll expense, because they're going to have to record it as payroll expense because these are expenses as it has incurred.